Michael Saylor just made one of the most radical claims in modern finance, that Bitcoin is becoming the world's first risk-free asset. When you compare it to fiat currencies, that can be printed, frozen or devalued overnight. The argument becomes impossible to ignore. Today, we break down why Saylor believes cash is fiat land, why real estate and collectibles can't compare with Bitcoin's scarcity, and why this shift is exhilarating as global currencies continue to debase. So let's start off the first point, why fiat currencies and the dollar aren't really ideal as a store of value. The majority of us that are not completely well off and super rich, they already have this sorted. They don't store the majority of their wealth in US dollar or indeed any other fiat currency, right? So that they're really well ahead of the rest of us mortals who are trying to find that magical asset in which to store our wealth in the long run. So if you're not a super rich person, which is the rest of us, we still have the majority of our portfolio and savings in cash, right? The main reasons why fiat currencies and US dollar is no different, it's not an ideal store of value, is because it's not scarce, right? Governments print money. It's something you can easily produce, so that in itself it cannot be treated as a store of value. And also it can easily be confiscated by governments or central authorities or even indeed banks. They can easily freeze your accounts. That is the reasons why fiat currencies aren't a desirable asset, as a store of value at least. For a medium exchange, yes, I would argue yes, but really not as a store of value. Now, there are other forms of store of value, not just Bitcoin, which is the hardest asset, but we have other hard asset examples like premium real estate property. So let's say if it's a super well sought after premium real estate in central London or in downtown Manhattan, that is something that is desirable because it can't easily reproduce or make more of those type of unique sought after real estate. So that is an example of a desirable asset. He also made a mention if we are into arts and collectibles, so let's say Picasso artwork, of course, the artist is no longer with us, so in itself that is an example of a desirable asset, right? So there are various forms of store of value, but for me personally, Bitcoin is actually the hardest, right? Because there'll only be 21 million Bitcoins in circulation. That's really the bottom line feature if you compare it with real estate properties and other forms of desirable assets, right? And also in history, we have plenty of examples where fiat currencies have collapsed and heavily devalued itself over the years and centuries. So one other thing I want to mention on that is, as you know, currencies, as governments can print more money and produce an awful lot more of fiat currencies, they naturally fall into the realm of inflation. And that is one of the triggers why we have seen in history lots of fiat examples and currencies crash as a result of that abuse, if you like, because it becomes worthless. If you make so much more of a fiat currency, not only do you inflate the actual supply of that in the economy, you also devalue the rest of our cash deposits in the same fiat currency in bank accounts. It becomes worthless, right? And that is an example of currency debasement, currency devaluation, and as a result, at the end, what is the symptom? Well, it crashes, right? So we have seen many examples of this, and this is the reason why you shouldn't actually store the majority of your portfolio in cash. And what is the answer of Bitcoin? Why is it a solution? Well, as Michael explained, you can treat Bitcoin as a bank in cyberspace, right? It's held in a decentralized blockchain, which is Bitcoin, and an asset that you can store your life savings, which cannot be corrupt, full stop, or easily taken away from you, because the private keys that are used to manage those Bitcoin holdings that you have, let's say, on your hardware cold wallet, under the self-custody arrangement, no one can have access to that unless you hand over your private keys, let's say, to somebody else, right? So that is the answer for Bitcoin as the leading hard asset in human history, and which makes it ideal as an ultimate store of value technology, particularly if you want to store your wealth in the long run. So not just worrying about capital preservation, but also capital growth in the long term. So that's the essence of Saylor's thesis. Fiat currencies collapse through inflation, real estate and collectibles have natural limits, and Bitcoin, with its fixed supply, decentralization, and global adoption curve, is rapidly evolving into the strongest long-term store of value humanity has ever seen. Yes, volatility exists, but volatility is not risk. In fact, volatility is what attracts liquidity and fuels long-term performance. As Bitcoin's market cap grows from $1.5 trillion towards the tens of trillions, volatility will continue to compress, adoption will deepen, and the asset will behave more like a global monetary foundation than a speculative instrument. Every asset carries existential risk. Equities, bonds, real estate, even the food you order at a restaurant. Bitcoin is no different, but unlike fiat, it cannot be printed, seized, or devalued by decree. If this breakdown helped clarify why Saylor calls Bitcoin the world's risk-free asset, hit that like button, share it with someone still stuck in fiat land thinking, and subscribe for the next deep dive into the future of global finance. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.